We are back in correction territory for the Dow. Let's talk about what's happened this week. Trade, tariffs, tech. Today, out of D.C., the president did sign this omnibus spending bill. That's pretty good, but we are still mired here in red across the board.
Yeah, the uncertainty from Washington plus Facebook were the two proximate causes, I think, of everything that happened. And then you had Friday afternoon-itis, which is you watch it at 3:30, it's down 200, and by the close, it's down 400. So, you know, the McMaster, the McDougal, the China, the tariffs, the trades, and then John Bolton coming in and then sort of being connected to the Facebook story. Maybe I'm a little too close to everything. But, you know, just not a lot of good news to hang your hat on, right?
Miles just got back from Washington, D.C. They got stuck there, lucky Miles.
After
Who
doesn't want another 24 hours in Washington, D.C.?
A rate hike, too.
Yeah.
All this Trump stuff. He threatened he wasn't going to sign the bill. We got a little reality TV there, but then he did sign it.
The second season has been phenomenal.
Trying to distract us from other stuff that's going on in Trump land. No, I'm reading too much into this. D.C. doesn't matter about today. What do you think the narrative
is?
I
think what's been very interesting over the last couple weeks is the way that the tariff story has, at least in my view, been a little bit of a slow bleed, right? If you remember the first day he announced tariffs, market was down, then people came back. There's a lot of conflicting research, at least from what I'm seeing out of Wall Street, saying, well, you know, it's not great when you have trade conflicts bubbling up, but if you look at the overall hit to GDP, it might end up being fine. And I think the market has essentially voted here over the last couple weeks that, you know, it's not great, right? The market is a forward-looking mechanism, and I think that investors are looking out to the future, unlike what they did last year, where they said, well, tax reform is coming, that's going to be good no matter what, and saying, well, we're not sure what trade policy holds, and I think there's a little bit more skepticism about the Trump economic agenda now, although, of course, Jen, to your point, we may all just be reverse engineering a narrative here about what's happening in the stock market to what's happening in Wall Street, but I think that, you know, Trump is playing a more central role right now, at least in the day-to-day market story, than he did maybe, you know, last year, I think.
Hey, Lee, it's so fun to have you in town for a day like today.
Good. And looking good.
We don't get a lot of people in Alexander McQueen jackets. We really like it.
Yes.
So last time we had you on,
yeah.
Remember, that was an exciting day.
No, the 5th of April is a short volatility, short squeeze
February,
crash.
yes.
February.
I know, you're jumping ahead to April. Now, I want to know what I should be in April. Right now, you had thought that was not the time. That low was not the day to buy. You wanted some patience. Now, is this long enough?
Yes, this is fine. This is fine. Actually, we're not even at the level yet that we were the Thursday after we saw each other. And it was that Friday on the 9th that I went and bought because I had a 10% correction. I've been waiting for that since when? Since you just mentioned a few minutes ago, January 2016, I was in there on February 11th, had no idea that was the bottom. I thought I had missed the bottom, and that's where we were buying. So this is the same thing. We haven't seen it bad since January 16. This is where you buy. You could have bought back on the 8th of February. I think you can buy today, and I'm not worried about those who say a bottom never gets locked on a Friday. There's been instances. We are trying to reverse engineer a narrative. I think Trump is all bark, no bite. I know Larry Kudlow, he's in that job. This is all about negotiation. And look at Century Aluminum, that was the tell, right? It was down 20% yesterday. Last week, JP Morgan said this thing's going to $29 because of Trump, because Trump controls the market, and then it's down 20%. You know why? Some exemptions, or maybe we're gonna...
A lot of flexibility in there.
Yeah, you know what I'm flexible on? 10% correction.
And so Caterpillar, you know, that's taking a big hit, but, you know, the Chinese are still going to be buying those babies because it's not really going to happen.
Right.
They're not canceling airline orders from Boeing.
Boeing, same kind of thing, right?
His bark is worse than his bite, but still...
He's barking.
He barks a lot.
Yes.
So are we just supposed to ignore all his barking, tweeting, talking?
Oh, hell no. Look, it gave us a 10% correction to buy. I haven't had a time to put new capital or overweight my stocks by 3 to 5%, which, you know, I manage money for old retired people, so that's like a massive, you know, shift. I haven't had that since February 16, January 16. So I need, you know, we talked all last year that this guy talks so much, we're immune to it. Now we're not, and that's where I get action. I make money when people panic. I make money when we believe in the reverse engineering. Look at last year. I remember, I think I was on here saying I'm concerned about the inauguration, I'm concerned about having a redux of Reagan and all that. It didn't happen because he talks too much.
Let's talk about some of the specifics in this market right now. We have closed. We on the Dow are off more than 400 points to end the day. This is the worst week that we've had for the markets in 2 years here. Crude having a pretty good day. Some of the sectors that were really beat up, the XLF financials, Miles, when you were down there in DC for the Fed, we were talking about the 10-year hitting 3 and like this is going to be good for banks.
And then yesterday, it looked like the risk on trade was fine.
Yeah.
Right?
So
Or risk off.
Risk off.
excuse me,
So
yeah.
I mean, then risk off continued today. Financials are destined to be beaten up here for
Bank
a while.
America down 4.5%. Yeah, JP Morgan off 2.5%. Wells Fargo down 2%. Although the 10-year back to 283, I don't really think that that's going anywhere. I mean, I think the story about the 10-year wanting to head towards 3%, I think it still has a date with 3% at some point. The Fed is going to continue to raise interest rates. I mean, that's very clear. So I think that's a very interesting dynamic in markets, just looking at that whole, the endless debate of are higher rates good for the banks? Are they bad for the banks? Is that a reason to buy banks? And all that.
Until the 10-year is 4.25, I'm really not caring about balance sheets, right? And I think if you look back over decades and decades and decades, 4.25 is where I start getting nervous. We can't even get a 3 handle, right? So I'm not.
How
really
can you
too
even
concerned
talk
about
about 4.25?
That's like
I don't even know when
miles
that
away.
could happen.
Doesn't exist anymore.
How?
That's only taking us back. I mean, look at what those rates were back in 2013. They weren't quite 4, but we're definitely, into the 3s back then.
Right.
People still bought homes in 2013.
Yeah.
As much as I can remember. I think this bank trade is just a risk-off trade because the banks are going to do better with a little higher.
One thing that feels different to me this week, Andy, versus the beginning of February, was people were talking a lot about the fundamentals are really good. Like fundamentals are okay. Like don't worry. I don't know. I don't feel like I'm hearing that the same way, that there is a little bit more skepticism out there, to Miles' point earlier.
Well, but then, the Fed just raised rates. So how bad could things be? And they talked about the strength of the economy. I mean, you're talking about a level of granularity, Jen, that I think is lost on many people. I think that, look at the unemployment rate.
Yeah, but retail sales are down 3 months in a row. I just feel like there's.
But how's Amazon's business? So.
For me, very good.
Right. I feel like that part of the story is still intact. In other words, there's no way things have fallen off the cliff. I mean, remember, we're talking about like this, the market right now, which is, a forward-looking voting machine, and nothing's happened yet. I mean, the economy is certainly not dropped off, and rates, and we don't have this inflation we were looking for either.